Hello everyone, Maurice and welcome to Things Invest. We talk about investing, finance, pressure development. For today's video, 8 terms only. The investment I'm going to talk about today will be Ethereum ticker ETH. And this is my second video that I'm posting on Ethereum today, and I promise you guys that I will be doing a second one despite my day was relatively busy. I'm actually prepping for my interview coming up with CNBC on this Thursday coming up. So I'm going to be basically out of the day, I think on Thursday. I'm going to be filming quite a lot that day around like Chinatown and Flushing area of New York. So I'm pretty excited about this. But I think it's going to be raining on that day as well. So I'm kind of concerned at the moment because I don't want to be drenched or be avoiding rain while I'm obviously speaking to the reporter and filming at the same time. Back to Ethereum, as I'm recording around 4:59 p.m. on the Eastern time, right? Currently trading at like $1948 level, down about 4% so far. It seems like with respect to today, despite the negative CPI report today, we had obviously some sell-off across the whole equity market with respect to SPY down about 0.04%, with respect to NASDAQ down about 0.38%, basically kind of neutralizing ever since that pump that we had yesterday with that anticipatory pressure that I guess investors were thinking that, today was going to be a green day because more of a foreshadow positive CPI report, but it came up to the opposite exactly, right? However, with respect to the expected anti-correlation effect that we're expecting to happen across the crypto market, it seems like the volume today is relatively low. Which is the reason why you could see that Bitcoin is currently down about like 0.9494%, which is not really moving much. With respect to Ethereum, is selling off a little bit more, but if you check the news, it's really isn't anything like significantly negative onto Ethereum, but it's more just because of the fact that Ethereum is a lower price point in comparisons to other more stable coin, if you may, right? So if you think about like Cardano, if you think about Dogecoin, if you think about Solano, if you may, those are obviously selling off a little bit more. And the key drivers for the sell-off is really due to low volume. So when there's low volume in the demand, right, while at the same time the supply is still sustaining, over time it's going to sell off a little bit more. Just the basic logics of supply and demand, right? It seems like with respect to Ethereum, is we basically breached the $1960 level. We're kind of hovering around like $1951 level. So I'm going to go through a technical analysis to see how we're going to be trending going forward, right? What are the level of resistance that we should be dollar cost averaging going forward or looking out for to risk mitigate going forward, right? So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for Ethereum ticker ETH. I'm recording this at 5:04 p.m. on the Eastern time right now. Currently trading around like the $1954 level, down about 3.73%. So despite the negative CPI report that we've had today, it seems like obviously we have some sell-off in the equity market, right? And we subsequently have some minimal anti-correlation effects to Ethereum, which we saw that earlier today, that we're kind of peaking, right, up to the $1982 level, above obviously the $1960 level that we sold off earlier today, or depending on what time or early last night, depending on what international region you were at, right? So it seems like we are hovering away right now. And if you look at the volume, we are relatively low in volume in comparisons to previous days, right? And this is basically an indicator, by capsulating all of the factors that we've learned so far, is that with respect to the demand that we currently have right now is lower than the current supply that's being sustained at the moment. Which, when you see that type of occurrence in the supply and demand dynamics, you will subsequently have some sell-off, right? That's just basic macroeconomics, right? So with respect to this level, I think investors are definitely being more cautious, with respect to the inflationary pressure that we will be expecting to endure a little bit more later in the future. And also with respect to the quantitative tightening or the tapering plan, I guess investors, on a more public perspective, are definitely holding the cash closer to heart rather than exchanging or converting that into more of a safe haven effect, right? And if you could see today, you understand that with respect to quantitative tightening or tapering, this still typically anti-correlates with the U.S. dollars to cause it to appreciate. Because when you cut off the circulations of the supply of U.S. dollars, right, demand sustains, but supplies actually goes down, right? Not the other way around, goes down, right? That will obviously drive the U.S. dollar value to appreciate, right? And when that happens, people typically want to hold their cash. They want to be exchanging that for a safe haven because they expect the economy slowly coming back up, the tightening to be happening going forward, which subsequently will kind of push Ethereum or sustain Ethereum to be at this level that we're at right now and consolidate the sideways fashion, right? So where I see the levels of Ethereum going forward, knowing the fact that we don't ever just stay within between the levels, right? You either go up all the way to the $2,000 level, which is the level that we've that identifies a a mental flat number level, right? Also a psychological resistance level, right? But the true resistance level is again, right? It's the $2,050 that we've tested before we leap down, which is the reason you see this little mini candle here, right? But right now we are, below that 1960, which is a substantive level that we've had before. Not a very substantive, but just like is a substantive level that we've had. But a more substantive level, a true consolidation level will be the 1900, right? Which I actually foresee us to be leaping down. If you take a look at the MACD right now, right, you could see how much we are fusing together right now, despite RSIs being not oversold, but more like depleting. We kind of like squeezing the air off the balloon right now, that this is a bearish signal that we're seeing right now. We are slowly forming a cross, and when we cross, we are going to be testing that 1900, and there's even a likelihood that if you test the 1900 and you break through the 1900 and you don't sustain this level, right, contingent on how we're going to be trending as we cross, right, how severe is this cross section, and what level of the RSI will be depleting up to, right? If we cross and the RSI deplete up to like the 34 level, right, we will rebound from the 1900. Definitely. That's just the facts, right? Because you don't ever go below the core of Earth, right? But if we are still enduring a little bit and we haven't crossed yet, right, while we're still depleting, we have a probability to go down to the 1850. That's just how the chart is telling me how it's set up right now, okay? So the $2 cost average or risk control yourself right now, I actually don't mind buying at this level because of the summit that's coming up on a macro perspective, right? The summit's coming up with respect to the August 4th with the London fork that's coming up with respect to the FOMC meeting that's expected to come up again. Despite today's negative CPI report, I don't foresee that to be a consecutive affectation again, right? But if you look at SPY and you look at NASDAQ, we are pretty much overbought at all levels right now. And I do see a sell-off, a correction, which happens during summertime. I think August or September typically are correction time in the equity market if you look at historical trends. I think that happened last year, if you think about that historically speaking, right? And it's not the first time either. And you basically dip on, in August and September, and then you have the Santa Claus rally, up until December from there. I think that's like the normal course of oscillation cadence, but more of like the most macro level, right? So which will subsequently pump up Ethereum if you think about it that way, right? So I do see some sell-off coming, right, to 1900, next level 1950. Do we see 1750? I think by then we'll be so depleted, we'll basically go back to the core, like the Earth crust again, right? And I don't think that will be logical because of the affectation that we'll be experiencing. The three factors are relatively massive, seismic market catalysts that we'd be expecting, right? So something to be mindful of, but these are the level you can be risk mitigated. All right, just to go through the technical analysis, knowing the fact that we did break the 1960, we do have a high propensity to go down to 1900 because of the cross section that we're forming, but we have to keep an eye out on because if we do cross, we're going to keep going down to the 1900 definitely. And the likelihood of actually getting to 1850 to deplete the RSI completely before the rebound would be likely. So that's something to be mindful of and risk mitigate from there, right? With respect to corporate adoption, 20%, 9,800, 5 times your money if you buy the $1960. All right, so that's it for today. With respect to my technical analysis again on Ethereum. Hopefully this is helpful into understanding the current dynamics of the market right now. The sell-off is unfortunate. Obviously, for a short-term perspective, there's definitely going to be some pain that we're enduring. I am personally enduring some pain right now. I currently hold 53.5 Ethereum right now, so I am bleeding like crazy today. So I'm right there with you. But don't worry, this is supposed to happen, right? You just have to go through the economical cycle by risk mitigating, by maneuvering through, by dollar cost averaging logically. And that's how you're going to win the game over time. think about this in a long-term value proposition perspective. Think about this in a long-term value and capital gains perspective. And you should think about this with logics rather than think about this with emotions, and you should do just fine. Hopefully this is helpful. Take care.